I mean, you've been an entrepreneur, CEO, and a major shareholder in this group for most of your adult life.
Yeah.
And yeah, I guess the first question is essentially which of these three roles that you enjoy the most, and maybe if you can share some of them that you do like a bit less.
Most it's definitely the ownership. No, but I like it all. You can say sometimes it's of course more fun and sometimes less fun, but I think it's year number 27. As 27 years ago we went public, and as you can say I'm pretty used to it now. But I really still enjoy the work, and I think it might depend on that we have grown so much. I mean, when we went public, it was, if I remember correctly, 320 million in sales, and hopefully next year we come closer to 11 billion. And it has been very interesting to establish country after country and so on. So I really still enjoy it. But I'm very lucky to have had Göran by my side all those years, because what he loves I don't like. I like product sales, marketing.
Yeah, I noticed that
So-
there are these lists of CEO that have been in place the longest, and I think maybe you are not on the list because you had a little gap. I think when Göran was there
Yeah.
in 1 year or two. But I mean, with all these experiences that you have been building throughout your adult life, I mean, if you had the chance to travel back in time to visit the time machine here and now and go back to a young Torsten, just say, an adult, young adult Torsten, and you would only be able to bring three from this present. You would be able to, with everything you know, bring three key advice to that young Torsten. If you can attempt, what would those three be?
Yeah, that's a good question. Uh, I would probably have gone to US earlier, since that's also a very, very big market for our products. It was when I was in Seattle now, it was quite funny because let's say we were on 25 restaurants during 14 days, and all of them, excluding one, was selling merchandise for the restaurant with caps and sweaters and hoodies and t-shirts. The only one I know in Stockholm selling clothing in the restaurant is Hard Rock. So it's really a huge. I mean, US is the home of this market, and if it, I don't know if it would have been possible, but I would like to go there earlier. Uh, yeah, that's basically
That's one to delve on. That first one is very interesting because it's interesting that you reply this, since the big entry into the US with the acquisition you did in 2007
7, correct.
was, well, we will hear the presentation of this group, I think, after this rounding off. But that rendered a quite tough period for you. And
Absolutely.
nevertheless, that is exactly what you lived. That you would even give the advice to try to enter earlier.
Yeah. Now that acquisition was not well received from any, but except us then. But I mean, if you look at it since then, I think it's our most profitable acquisition, and it really gives us a good. So long term, it was absolutely correct. But short term, it caused us trouble. That's also correct.
Right. So in this recommendation, you would say enter earlier, but do acquire
No, but
this company.
things change so quick, and I mean, I'm kind of a guy that hate to do plans for 3 years and 5 years, because I have never managed to hit the budget on 27 years. I mean, it's sometimes a little bit better, sometimes worse. But to do this long-term plan, it's pretty useless. It's just wasting time. And if you see, I think the key is to move very quick when things happen. And the situation in 2007 and first half a year 2008 was totally different. 2000 and 2008 we started with Lehman, and then 2009. So the only thing we could do at that time was really to take all actions, and I think we learned a lot also from that when we had the pandemic. where we acted very, very quick, and we came out the pandemic more profitable when we went into it. So I think it's you need to be quick and fast, and you need to adapt how the world is around you, and that I think is more important.
And I guess now you have a totally different debt level than what you had then. But is it also perhaps important to sort of educate the stakeholders, if you have banks and other stakeholders providing you with funding, of how your business works
Yeah.
and how you tie up capital?
So what you mean? I mean like this, that I was never nervous when we were down on 30% in equity ratio, and the reason is quite simple. I mean the main part. I mean, to create cash flow is the easiest thing for us. That's 10 times more easy than to build the business or something. And out of two reasons, I mean, the balance sheet is to a very big part stock and receivables. And the receivables automatically go down if the sales goes down. And the stock we can control within 6 months. We can cut down. We don't own the production, so we can really buy what we want. But if we shouldn't be failing or cheating the suppliers, we have 6 months in advance, and there we need to fulfill the orders to not put them in deep trouble. But after 6 months, it's very, very easy to create cash flow. It's the most easy things that we actually can do. But of course, it was, I think, a surprise to the market all of that time. Because with the growth, I think we had an average growth on organic establishment and acquisitions on 39% or something for was it 17 years or something? And I mean, if you grow 39% every year, then it's impossible to do that with positive cash flow, because we need to build up the stock before and so on. But it was 10 times easier to create cash flow than to build up the business.
Right. But I think there was a question also in the audience before, on this subject a little bit, that you were on one end of this. I mean, that your industry requires capital, and that maybe some stakeholders are not really that deep into how your industry works, and that you require to carry that capital to render revenue. This time around, perhaps, and after the tough period of the pandemic, maybe some of your key competitors are a little bit on the other side of the table now, and that it opens an opportunity for you to take some market share.
A little bit, but we should remember that it's not a crisis now like it was first 6 months of the pandemic or 2009. It's like I said, my chairman described it as a wet blanket over everything, but not a crisis. So I can't say that it's a lot of competitors on the corporate side that are in deep trouble, but they are doing less good. And I think most people, including myself, is surprised that it has lasted so long time. I mean, I thought wrong for 1.5 years. Now I give it up and say that it will probably be some other quarters before the market recover. So not in deep trouble, but it can give us opportunities there to maybe buy a little bit cheaper.
Right.
And on retail side, it's another story actually. There is many that are totally depending on retail that have problems today and making quite huge losses and so on.
Yes.
On the other side, I think that we don't want to acquire brands that are too fashionable. We don't want to acquire brands that are 100% depending on retail. And I think all of you, that's in line with what Stefan said also about the retail business. So there it's, I don't think I overestimate if I said that we have been offered 50 retail brands the last 2 years, but it's not our core business, and it's too high risks, and we shouldn't go in there.
Yeah, makes sense. Yeah, well, we've been looking back a little bit, but if we look forward instead, you just mentioned how you don't like to make long-term plans because the only thing they approve is that they will never be right. But nevertheless, if I stretch you a bit there and ask you to look out, not just make a 3-year budget or anything like that, look out in time, 10 years out. What if you try to do that? What do you think will be the biggest events impacting your industry?
I think for us, we will have a huge growth on teamwear. I'm surprised if we have not established some places in South America and Australia. I'm surprised if we don't cover Eastern Europe. And we should be much, much bigger, and we should definitely be number one worldwide on corporate side. So I know what I want, but I don't know exactly. It's no idea to plan how to get there. That's more or less you have to change and take and grab chances and so on a daily. But we also know very well, and this I think is important. As I said about retail, we also know what we don't want to acquire, and then it's also easier to do the right things. It's so, but the goal is still to have a high growth, and I will be disappointed actually if the market recover a little bit, if we don't can go above 10% again and stay there for some years on a yearly growth. And, organic, yeah. No, but I see a great future, and I still think it's very, very fun. And I also think that now we have a scale of advantage, an advantage of the scale compared with many competitors. I mean, in total, we are by far number one in Europe as well now on corporate side. Teamwear, we need to, if we really should be big in Europe there, we need to break Germany. And Germany is a very tricky market with, I mean, it's home country for both Adi and Puma. You have quite big competitors in Jacko and Erima that are more similar to us than I can. But we need to break through in some big countries there. It could also be France, it could be UK, but it's hard competition. So I agree with Stefan. I think we have better chances to grow quick in US actually.
Right. I would come back a little bit to the geographies, but just staying on this sort of long-term view of you were mentioned you have a very clear plan and an ambitious plan for New Wave. If you think about the external environment, what do you see there? For example, if we talk something that everybody talks about now, AI. How have you seen AI? Has it affected at all any parts of your business this far? And if you also try to envision how it might impact you or have an effect going forward for you?
It's have effect a little bit on how we produce marketing material, but I would say that's not much more than that yet. And I have seen so many changes, and when AI is really, really, really there and really, really, really good, then we will adopt it and do it extremely well. But I mean, I have seen the development from clients, for example, had no information at all of what we had on stock. Second step was that we send out telefax. Maybe some of you don't know what it was, but you put in a paper and it came out a paper at the receiver's office. And there, with that paper, we told the clients that you should avoid to sell those products because they are low in stock or we don't have them in stock. Until today, when everybody is up more or less and see exactly minute for minute how much stock they have access to on different products via internet. And so, and those things are quite natural. The oldest of you maybe remember the first or the big one, the first phone I had, mobile phone I had, was Nokia like this. You have to carry it around like a big box. I remember China. I mean, I was in the town called Ningbo, 1992, I think it was, and I couldn't find it on the map, so I couldn't describe where I was. And that was a city at that time of 10 million people, and you couldn't talk. I told my wife at that time that I think I can call home on that Monday and that Thursday, because then I'm in Shanghai in an international hotel. Today you're sitting in a taxi on the Chinese countryside and talk with a taxi in New York or Stockholm or whatever. So those changes is natural. In one way, I'm a little afraid for AI, but that's more due to that I think valuations start to go crazy on those companies, and it's a little bit. I feel a little bit like if you remember when
The internet bubble.
yeah, when Brick should crash Windows. You remember that?
Yeah, yeah.
Yeah, I got the same feeling here. Everybody's now rushing into this, and I'm sure it will be good, but it will take some years, and it's never go so fast as people think.
Right. Yeah, these bubbles tend to allocate a lot of capital, and then a lot of these businesses will not work, but it might still be beneficial overall, so to
Yeah.
speak. For the internet was not a bubble, but many of the internet companies were.
Yeah.
But just staying on this subject for a few more minutes, there is another big area in terms of robotics. There's a lot of talk about this, and you actually have robots. You could argue in your fulfillment center for these rolling robots over the automated picking solution that picks crates. How do you view that? And there is, for example, talk about how Amazon is elaborating, and other players about humanoid robots that might carry crates and so.
We will soon install the first one, more human robot, at the company in Belgium as a test.
Okay.
No,
Very interesting.
but yeah, but you can say I want to be. I don't want to be in the forefront when it comes to different techniques, but I want to adapt it very quick when it's
Mature.
proven that it works. Yeah, when it's more mature at least.
When it adds value.
And of course the automatization and the robots on the warehouse, it has totally changed everything. I mean, we can run the warehouses on an efficient cost level 24 hours a day. We have no problem to handle the different seasons. The deliveries out to the client are much more correct, which give less returns. It's so many advantages, and that I'm very happy for. But then you can say initially it's always a cost. And for example, right now, we started with high robotics in Netherlands. I think it was operative in May, June. We still have more people in the warehouse than we had before high robotics. So it takes a year or two before it's really start paying off, and then it's pay off quick. And we will continue that. But of course, it's a certain level in volume that you must have in each country. So it's any idea. And today, the biggest warehouse is all already done.
Very interesting. You have a very hands-on approach to this rather than speaking up the expectations, perhaps around the overall subject. But one final thing about technology and so on. I think you have mentioned that automation of embroidery and print has risen a lot. That technology. How might that change your business the coming 5 years?
It will continue. It have already changed the business a bit, and it will continue to change it. The big difference, I would say, is that you, on a reasonable cost today, could make one piece with a print or a logo that would have cost a fortune 5 years ago. And that development, I think, will continue, and that's fantastic for our merchandise business. I don't know. I think I said it on last report, but in Gothenburg you have a couple of good football clubs, but you have Gais and the IFK Göteborg. And now this is very difficult to translate into English, but Gais have the nickname the Mackerels. And when it was a derby, they met, and the IFK was winning. And then we, the same evening, have out a T-shirt with a big mackerel, but under it was a cod, which is a loser, you can say. And it was sold. I don't remember the total volume, but it was several thousands T-shirts sold on 24 hours. And if you came out with, in the past, you have two options. Either you have to gamble and print them before if you should be able to deliver them, or you can offer it maybe for delivery 2-3 weeks after. And 2-3 weeks after, the interest has gone down like this. So and there I think the new techniques can give a lot of different opportunities.
But that puts pressure also on you as suppliers to be able to deliver very quickly then, because the demand will be quicker.
Yeah, but we don't have any problem with that. It's a print that are the problem. I mean, the stocks are there, so it's.
Will you also increase in the print and do embroidery in your own, so when it leaves your fulfillment center, everything is finalized?
We will look at an establishment in Eastern Europe especially for screen printing. We have different solutions. In Sweden, we have one actually external company that rents space on the biggest warehouse that are located in Dingle on the west coast. So they rent the space, but the advantage for the client is that they save the freight between the printer and us, and also they can get one invoice because we can do the admin on it. In Ahead, Back, we have own decoration centers, and we will have in Texas as well when that comes next year. And hardware, as I said before, we are printing, I think 99%, maybe 99.5% of all pens or chargers or something are printed already, and just very little bit blanks. And I think it will continue that way.
Right. And the final one, actually on technology, perhaps. Post the pandemic, I know that you were a bit enthusiastic about the new meeting, the digital meeting, the Teams of this world, or Zoom or whatever, and you said that now we're not going to be traveling as much because we found this new way to interact. But I've noticed you've been traveling quite a bit as of recently. So is it world going back to normal, do you think, or somewhere in between? Or?
Depends on what normal is, but
to where we were.
You can say I think that it's quite fantastic to have meetings on Teams, and it's really not a problem if you have it with clients that you have known for 10 years, or if you have people you have worked with. I mean, we have the luxury that we have a lot of management that have been in the group for 10, 15, 20, 25 years. And then it's no problem. But to build new relation and to build up new clients, it's extremely difficult sitting on only Teams. And it's the same on the supplier base. It's a huge difference with walking around in the factory or see a guy sitting in the screen telling how good they are, but you don't see it. So I think traveling is necessary if you should continue build. But we do travel much less than before, because in the subsidiaries we had like 3 to 4 physical meetings in the past. Now we have, if it's a normal situation, we maybe have 2 physical, sometimes even only 1, and the rest of the meetings on Teams. But you have that, and then you can say also in my job I need to travel to get the feeling of the markets, to keep me creative. I mean, it was fine the first year during the pandemic, but after a year you really felt that you don't get enough inputs about markets, about products, about brands, and so on. So but this fall has been extreme. But it's also, I think the situation in the world is a little bit extreme.
Surely so. We heard it already in Stefan's presentation here about home brands, how retailers are really pushing their own labels. There is new competition from that side. We have digital direct-to-consumer models that are also winning ground. How does these new phenomenon affect your business or your approach to your business, essentially?
Now, you can say we have maybe changed a little bit of a strategy. As I said, that acquiring pure retail brands that are only built on retail, it's not so interesting for us today. The e-commerce is, of course, both a chance and a threat. I mean, as Stefan said, in percentage, it's the fastest growth in craft right now. Home brands they have existed for a long time. And I think it's very difficult for any chain, if you're not extremely low price orientated, to really have so much higher percentage than it is today. It can move a little bit more, but I mean the consumers is not stupid. If you take a sports brand that are unknown, sold by one chain, and compare with Adidas or Nike, you can't do that because the consumer is not so stupid.
But yeah, but private labels are winning ground gradually.
Yeah.
And I mean, you are quite agnostic, I think, in your business approach. I mean, you do the trading orders; they have a very low gross margin, but they contribute, as you usually say, to your EBIT. And you do delivery in your promo of unlabeled products. So, have you ever thought about actually turning the stakes and deliver to those retailers that want to build their own brands?
We do.
You already do, and I mean, is that
In,
business that you can expand?
it's in the trading business. Yes, absolutely it is. But I also think we should also remember that the last years, when we're talking private labels, you have had I think not only in our business, in most business, it's also the low price chains that have been the winners the last years. It's not the more mid type of companies. So I think that the movement also from brands to private labels is also depending on that you move from or down, so to say, to low price chains in many cases.
Surely so, but we see a growth of private labels or home brands, whatever we want to call them, in all price segment. I think, even if discount has been winning,
it's increasing, but it's not increasing so very much. If you look at chains like Intersport, for example, that are big clients in both ways.
Right. Right. If you think about geographies again, we were touching upon it before, but where do you see, geographically wise, where do you see the biggest potential? I think you stated, but I want you to summarize it again, and maybe sort of which market pockets where you are now geographically in terms of Europe and US, but where do you think you have most to win, or where do you want to see you growing more?
Short term, it's definitely US, because we are still extremely small there in market shares, but we anyhow have a quite strong foundation, and we are very profitable. And it's increasing, even if it's tougher now. And I mean, if we increase our business on 2 warehouses all over US, as it is right now for Cut and Back and Click, for example, it means that we don't serve the whole US. We are more a regional dealer in some regions there. So US definitely. And there I'm also more optimistic that the competition is actually a bit lower among certain product groups. Like teamwear we discussed before, that's a typical example there. I think Germany is much tougher competition than it is in US. So I believe a lot in US, but then still we have very small market shares in Germany, France, Spain. So we have still a lot to do in that part. Eastern Europe, where we are extremely small. Australia we haven't touched yet, and we have a distributor there for Jobman. But Australia would also be very easy for us, except the distance from here. But I mean, it's actually closer logistic-wise to our production and where we source. Everything is already on English, if you talk catalogs or web shops or whatever it is. So it would be quite easy and don't take too high investments.
Right. You see, you're eager to grow in the US. You explained in the beginning how you would send a signal to yourself, to your young self, that you should be entering earlier on, if anything. And you have a quite strong balance sheet now, and you have continuously communicated, the opportunity to make acquisitions, and you have done 2 promo acquisitions here in Europe. Are there any targets in the US? Is there a fast route for you to expand there?
It's absolutely.
Can you mention a few names without mentioning anything that is sensitive? Just mention a few.
I don't think so, actually. No, but it's absolutely a chance in US, since we are so tiny there still. But we should also remember that I think the competition in some product groups could be tougher. Some is actually less than the big European countries. But it's also quite easy place to handle. I mean, you have one currency, you have one language. In South, you can maybe use also a little bit of Spanish, but one currency on this huge market and one language is very easy. I think it's there for many Americans actually fail in Europe because they go to Europe and think it's the US, and it's not. I don't know how many languages. I think we do the click catalog on 17 languages. I don't remember the number of currencies we sell in, but I mean, you have pounds, you have Swiss franc, you have euro, you have SEK, you have Danish, you have Norwegian. I'm sure I I'm sure I forgot some. So it's very different on that way, and to expand in US is from that perspective easier, actually.
Interesting. Yeah, I think the half hour is approaching rapidly, and I will leave a few minutes also to general questions out here. But just one final question, maybe, to sum this up. I mean, we started there going back to the young self. I don't know, was it in the early 80s you actually started this business?
It was the first company that later on became New Wave was 81.
81, yeah. And then you were like 18 years old or something like that?
No, I've done the military. I think I was 19.
19, all right.
Yeah, 19.
So your whole adult life, you've been operational essentially in this group and running it. But you also have a brother that is in Dingle, where it all started, and you have two daughters also, I believe, working in the group, and one is on the board. I think the other one was on the board.
Yeah.
So how long do you plan to stick around operationally yourself? And what about your family and the engagement? How does the future look there?
I admire Trump in one single case, and that's his age comparing with what he's doing. Otherwise, I'm not a big admirer. so
20 more years, that I guess.
if you're healthy, and I think it will not be less fun. I mean, we have greater opportunities now with this balance sheet and the profitability and so on than we had in the past. And if I can do the job, I mean, you notice sometimes that you're a bit older. I think I was in 8 countries spread out over Europe, US, and Asia for 7 weeks or something. And then you get a little bit tired, actually.
That's human, though.
I don't know if it's so nice to fly to Seattle 2 times a year when you are 75 years old with 9 hours time difference. But I hope to be able to stay active for quite a long time, and I have no plans to quit. Then if you look at, I have never ever forced any of the kids to so to say, go into New Wave. They have done it anyhow. The only goal I've had is that they should have enough knowledge to be a good long-term owner. I'm not sure that they even wish them my life, so to say, with always traveling and all those things. But I think it's important that it's a plan for the ownership in the future. So, and I think they are quite well trained. I must say now actually 2 are operative, but one is against what I wanted. But that's the oldest one that was in the board, that our CEO for Orrefors Costa Boda now. And I actually told her that why should you take the worst and most difficult job you can have in this group to start with? But she wanted it, and then she can try. And then I have one more daughter that was still studying at the university in Gothenburg. And then my son moved to China. So he lives in Shanghai since August and studied Chinese on the university in Shanghai there, and practice like 10 hours a week. Those 2 years he will study on the New Wave Group buying office. So they have an interest, and then we will see what's happening. But I actually don't care if they are operative or not, but I do care a lot about they have enough knowledge to be able to be in the board or to be long-term as owners.
Secure the ownership of the group.
Yes, and that I think is important. And not only for me, I think it's important for other shareholders as well.
Yes.
But it's also, I mean, when we are in Sweden, it's so much focus on my person, which I think is pretty wrong, actually, because if you go out and look like US, I keep contact with 3 clients just to be updated without a lot of filters between me and the market. So I think this group would also handle very, very well without me, actually.
thank you so much, Torsten, for all the answers. And yeah, maybe time for applause for that, I think.
Thank you.
But then I think we have maybe 1 or 2 minutes before we're gonna get the link to the US up. So please, Niklas, first hand up.
Yes, 2 questions, please. First one on Tencent now, following on this discussion on retail, perhaps not being sort of the area where you see the biggest opportunities going forward. How is Tencent doing, and will you need to do things differently to sort of speed up the development there? And also, are you still keen on, it didn't sound like it, but are you still sort of looking for outdoor brands still to perhaps buy?
Tencent is doing more or less as planned, and there we have already done what we should do, and that is to introduce it on the corporate market. If that was not the plan from the beginning, we would never acquired it, because then retail is too tough. But the combination to have some on retail and corporate, I think, can be very successful long-term also for Tencent, that it has been for our other brands. And yes, we still are interested in outdoor brands if it's product assortment that we also can introduce on the corporate market. But it's a little bit same thing there, an outdoor brand that are only 100% retail, and it's a product assortment that is not possible to sell volumes on corporate, then we will pause.
Okay, thank you. And then going back to the US there, so you currently have basically all of your business today is sports and leisure, Cutter and Buck and Craft. Why have you never entered the corporate business?
We should, the majority on the Cutter and Buck business in the USA is corporate.
Yeah, fair enough.
It's EFRS shit. That makes that everything is coming up as sports, but actually I think it's around 70% of the sales in Cutter and Buck as a company is corporate.
But it's only Cutter and Buck sort of golf, that's style. You have never introduced your other brands.
Yes, Click we introduced there some years ago. We did it 2011, I think, in a wider way.
But you ramped it up in recent years.
Yes.
Okay.
And also ahead you can, it's not corporate in that perspective, but it's quite close because we do supply a lot like merchandise. I mean, the biggest event this fall was Ryder Cup, where it was fantastic selling. So it's touching each other, you can say.
Okay. Thank you.
Further question, Andreas, back there. With the mic, I think it needs to be.
Thank you, Andreas, with SEB here. Inventory has always been a big issue or big thing in your company. Now in the last few years, you have raised your profitability through higher margins, while these inventory turnover / capital velocity has been sticky for 15, 20 years at one time or so. Do you think that could change in the future or not, given technology or?
I think we can improve it a little bit. And that's also depending a lot on how quick we expand. Because now, I mean, we put up a huge stock on Teamwear in US. Calculated stock turnover is 0.2 the first year. But it's no idea to enter US if we are not a very strong supplier and give a right service. So, I mean, all those new establishments are taking down the stock turnover in average. So if we grow a little bit slower or make less establishment, it will automatically go up a bit. But we will never be up on 2.0 or 1.8 or something, because then we can't fulfill our service level that we need to have. But of course now when we open up a new warehouse in Ireland, we just opened up 2 weeks ago a new bulk warehouse in Italy. Texas will come next year. Teamware in US and so on. We are some years before you will see it in the average figures, but a bit we can speed it up.
Maybe one final question. Somewhere who wants to have the final one?
Thank you so much, Fredrik from Nordea. Also, I was wondering what 3 bottlenecks do you see going from 10 billion yearly sales to 20 billion yearly sales?
I don't see any. That's the next goal, actually. It's serious. No, we have so much left to grow. It's more a question about how good work we can do and how quick we can expand. It's not any limit. It's in the market. I think we have a very strong management. We have the balance sheet, so it's a question about time. No, it's more when than if.
So will you be able to keep your 39% growth?
39. Yeah. That will be a bit tough, I think.